In this video, I'm going to continue working through the worksheet from Saturday, April 7th that we worked together in class. Question 1, Part G, asks us to reconcile comprehensive income by finding the net income plus the other comprehensive income. Again, I'm working on Kimberly Clark Company. I'm going to go to the statement of comprehensive income. I find my net income number here, 2319. That should reconcile back to what I see on my net income statement. Net income 2319. And in addition to that net income, I see an adjustment for other comprehensive income. Remember that other comprehensive income relates to unrealized gains and losses related to items that some may argue should be included in determining the company's value, and others would argue should not be included. The company reported a total of $590 million of other comprehensive income. This is primarily related to the unrealized currency translation adjustments. We can also find the net income and other comprehensive income reported on the statement of stockholders' equity. However, it's not so obvious how to tie the numbers from the statement of stockholders' equity back to the statement of comprehensive income. For Kimberly Clark's case, the reason it's quite difficult is if we come down here and we look at the changes in 2016's stockholders' equity accounts, we see that the numbers that are shown here are broken down for Kimberly Clark only versus the non-consolidated interests. The breakdown is different for what's shown in the statement of stockholders' equity compared to that which is shown in the statement of comprehensive income. Question 1, Part H, asks for the net payout, dividends plus stock repurchases minus share issues. We're going to gather this information still looking at the statement of stockholders' equity. We lose our headings when we scroll down to get to the 2016 to 2017 information. Realize that we can always open up this Excel document and look at these financial statements in Excel format. If I want to look at the data in Excel, I scroll over to find the tab that I'm interested in. Here it is, the statement of stockholders' equity. You can always freeze the panes in order to scroll down to look at my data, get rid of the 2014, 2015. Here I have my ending balances from 2016 and my changes that took place in each account for 2017. At the bottom of this screen, I see the numbers, total stockholders' equity of $882. That's reported on the balance sheet as total stockholders' equity. I also see my balances on the balance sheet that I can find for treasury stock, common stock, additional paid in capital on that common stock, retained earnings, and accumulated other comprehensive income. I can use this sheet to find my dividends information, dividends decrease retained earnings. So here I find the dividends declared of $13.71. I also can find my stock repurchases, $9.27. Don't be confused by this number here. This simply relates to the number of shares. We're looking at dollar amount of $927 million. And we also want to include this $125 million treasury stock. The treasury stock was reissued back to investors. This looks like it was given out to employees who exercised their stock options. So I see here the sum of this is 802. So my stock repurchases, cash was paid out of $802 million for stock buybacks. Dividends were paid out of $13.71. That gives me a net payout of $173 million. Question 1, Part I, asks for reconciliation of beginning equity to ending equity. Take beginning equity, add comprehensive income, add or subtract the net payout, and then get to ending equity. I can look at my beginning equity. This should be shown in the statement of stockholders' equity. Here we have last year's equity number of $117 million. I can also see this if I go to the balance sheet, look at 2016 information, scroll down to total stockholders' equity. Here, and look across, I see $117 million. I'm going to add to that the comprehensive income that I see in my statement of comprehensive income for the year 2017, $2,909,000,000, and I'm going to subtract from that the net payout I calculated in question 1, part H, of $2,173,000,000. That gives me an ending equity number of $853 million. When I look at the balance sheet, I see that the actual ending equity number is $882 million. It's off by a little bit. What is that difference due to? If I go to my statement of stockholders' equity, scroll down to data for 2016, looking in this section, and I see a lot takes place. As I mentioned earlier, it's very difficult to tie back the numbers, the breakdown between the amounts owned by the parent company, Kimberly Clark, and the amounts attributable to the non-consolidated interests. They break down differently here in the statement of stockholders' equity as they do in the statement of comprehensive income. But I can see that there are some differences. There's recognition of stock-based compensation. There's an other amount of 8. And the difference is small. Actual ending equity on the balance sheet is 882. With my calculation, it's 853. These differences are not that material. So I can look at this information and say that at least my difference between comprehensive income and the net payout is quite similar to what I see here in the statement of changes in stockholders' equity. Question 2 of this worksheet says to briefly tell the story of how the company's financial performance and position changed over the year. Based on all the questions that were asked in all the different parts of question 1, what happened? What can we take away from this company based on our analysis? What I would say is that during 2017, the company had net income reported on the income statement of $2,319,000,000. The majority, this is primarily coming from operating activities and therefore should be quite indicative of future earnings for the company. The company earned this net income off of its $15 billion investment in assets. If we go to the balance sheet here, we see the $15 billion investment in total assets. When we look at how these assets are financed, we see that very little of that is coming from equity. Most of the assets are financed with debt. Only a small portion of the company's income and stockholders' equity belongs to the non-consolidated interests. Comprehensive income of other comprehensive income of $590 million comes primarily from the foreign currency translation adjustments. The company paid out about $2.2 billion in dividends and share buybacks. However, this amount is quite a bit less than the company's net income, as well as its cash from operating activities. So I have no major concerns about any excessive payouts. Kimberly Clark is a mature, established company, so the higher payout is not unexpected. When we look at the next couple of questions on the handout, which items in the balance sheet are reported at fair value and which items are reported at historical or depreciated or amortized cost? I'd like you to look through chapter 2 of the textbook to come up with your answer to this. You'll see a section called 2.3, measurement in the balance sheet. That'll give you a lot more information on how to answer that question. Question 4 says which items in the balance sheet require subjectivity or management discretion in determining their value. Again, I'd like you to answer this question based on your own judgment of reading chapter 2 and giving some thought to your company's financials. Question 5 says what is the stock price on the date in which the financial statements were issued? So what determines stock price? Your basic economics class taught you that price is the point at which supply equals demand. But what causes the demand for a company's stock? Remember back to your financial management class. Stock price is measured as the present value of a company's future cash flows. The stock's price reflects the amount, timing, and uncertainty of the company's future cash flows. So where can we find stock price? I typically use Yahoo Finance. I'm going to look for my company's ticker, Kimberly Clark, KMB. I'm looking for historical data. I want to know the date that the financial statements were issued. So I go back to Edgar. I see that the filing date for the most recent 10K was February 8th, 2018. I want to find the stock price either on February 8th, 2018 or the nearest day prior to, in case that was a weekend. Let's search for a few days here, maybe start with February 5th. And go a few days after, just in case February 8th was a weekend. Looking for the closing price on February 8th, and I see that indeed it was a trading day. The closing price was $111.69. Question 6 asks, what is the market cap of the equity? Market cap is nothing more than stock price times number of shares outstanding. I'm going to hold off on that for just a minute and jump down to question 7. What is the company's book value on its financial statement date? Book value is the same thing as stockholders' equity on the books or the balance sheet. Remember, stockholders' equity is nothing more than assets minus liabilities. Think about how those assets are measured. Some at fair value, some at historical cost. Some assets, such as human capital, are not recorded on the balance sheet at all. If we take those assets and subtract the company's liabilities, which are typically reported at fair value, we get total stockholders' equity. Stockholders' equity is sometimes called net assets, meaning assets net of the liabilities. Kimberly Clark's book value or total stockholders' equity, as we saw on the company's balance sheet, book value is this total stockholders' equity of $882 million. Now to go back to question 6, which asks for the company's market value or market capitalization. I'm taking the stock price, which I found earlier, $111.88, and I'm going to multiply it by the number of shares that were shares of common stock that were outstanding on the financial statement date. How do we find the number of shares that were outstanding? On the balance sheet, I see this line item here for common stock. It tells me the number of shares that were authorized, the number of shares that were issued. I take the number of shares that were issued of common stock, 378.6 million. From that, I want to subtract the number of shares that were held in Treasury. And I see at December 31st, 2017, 27.5 million shares were held in Treasury. 378.6 minus the 27.5 gives me common shares outstanding of 351.1 million shares outstanding. To find the market cap, I'm going to multiply this by the stock price that we see of $111.69. I'm going to get a market cap of about $39 billion. As we continue down our worksheet, question 8 asks, what is the premium or discount at which the company's market value was trading relative to its book value? So again, we saw that market value was about $39 billion, and book value was less than $1 billion. So we can see quite a dramatic premium. Question 9 asks, what are some specific reasons why you think the company you're analyzing, its stock is trading above or below, in some cases, its book value per share? I'm going to hold off on answering that question for Kimberly Clark. I'd like to see what you come up with. And in the next video, I'll return to the textbook and work through some of the problems from there.